Hello and a very warm welcome to Startup Central here on ET Now. I'm Vikram Oza, and this is a show that focuses on startups, on technology, innovation, disruption, anything that has to do with the new economy. So if you have a unique idea, if you'd like to share some feedback, you can pitch to us as well here on suc@etnow.tv. And let's stay within the financial universe. Let's bring up India's largest discount broker, Zerodha. This startup applied for a mutual funds license, and why not? Several players would like a slice of that pie, of the mutual fund pie, which is a 28 trillion rupee industry. And if all goes well, we understand that Zerodha could go live with its mutual fund asset management business in a span of a year. But let's understand the company's plans. The founder and CEO, Nithin Kamath, joining us. Nithin, welcome to Startup Central. Great to have you with us. And if you can tell us up front about this expansion plan of your business, what exactly is the rationale behind getting into the business of managing mutual fund schemes now?
Yeah, thanks for having me on the show. So we started the business 10 years back, and it started off focusing on active traders, and then we started building for active investors. Then, we started our direct mutual fund platform called Coin 2 years back, two and a half years back, and and that's done quite well. So we have over 10,000 crores of investments that's happened through the direct mutual fund platform, and through this journey, the more we've understood our customers. We've done a decent job in terms of a user experience problem, so we're probably offering better platforms than what were there before. But I think the way to expand the market, which is really the problem that we all need to solve for today, I think requires companies like us to kind of reimagine this whole mutual fund as a product. Maybe there is a simplified version of a mutual fund that the current 20 to 30-year-old needs, to kind of help them on board and start investing in the capital markets.
That does make sense, but like you said, you started 10 years ago and you made your impact in the stockbroking business. You brought down transaction cost to 20 rupees a transaction. How are we likely to see that kind of philosophy expand into your mutual fund aspirations?
No, I mean, even at stockbroking, right? I mean, we've leveraged technology. I mean, a lot of people give credit to low cost for our growth, but actually, I think it's the credit is really to the technology, to the platforms that we've built, because people don't compromise on cost, as in if the quality is bad, right? So I think we take great pride in the in the platforms that we've built. So the idea is the same to do, I mean, firstly, we've just applied for a license, so it can take some time before we get approvals. But whenever we get approvals, the plan is to, again, leverage technology, see if all of this can be run at lower cost, offer better experiences for people investing in mutual funds.
Of course, like you're warning us that this could be sometime in the coming, but leveraging technology is something that you want to do. What kind of funds and schemes, though, are we likely to see emerge from the Zerodha stable? You mentioned that millennials, you're catering to them through this. I mean, which is the hope that you've announced in that tweet that you put out today as well? Just reimagining mutual fund schemes for a millennial investor. How are we likely to see that reflect in the kind of products you put out?
I mean, see, for sure, we're going to be passive, right? As in, I think, stock picking isn't really the skill set. So, so I'm sure, like there are, it's still too early, to say what will the final product be like. But if you were to ask me, I'd say it for sure will be passive. It'll be more, more things like, it won't be things like, you come and buy a small cap, mid cap, large cap fund. It'll probably be more saying, say a retirement fund, a target date fund, so on those lines, so it'll be very passive and very, kind of goal oriented, most likely, so, but there's still too early, as I said,
You keep saying that it's too early to say exactly the kind of products that will come out, but I'm sure you've done your study before getting into this business. I'm just wondering what consumer insights you've got from your existing user base as well. I just want to know, you have an existing user base of 1.5 million. How many of them are millennials who would be ready buyers for the kind of mutual funds and ETFs that you have in mind, which is something that I've been reading up and something that you've been talking about as well. But apart from the nature of the products, I'm just trying to understand the consumer insights that you have and from your existing base as well, why you've decided to go and address the millennials and their needs.
No, I mean, see, the thing is, like the real problem to solve in this country is, is probably there are 4-5 million active investors in this country. So it's about expanding the markets, right? As in, it's not really addressing to the existing customers. I mean, so when I walk up on the street, if I'm trying to figure out what is a product that I can have that I can sell to anyone on the street, right? So any 20 to 30-year-old, who's saving, earning, investing, I mean, how do we get them to invest in the capital markets? Right. So I mean, like I said, what we have learned from our existing almost 2 million customers is that the current bunch of product isn't working for the existing 20 to 30-year-olds. I mean, it works brilliantly for people who are already investing, but I think this new age kind of the millennial crowd maybe requires some other kind of innovative products to kind of grow the ecosystem, get more people to come investing in the markets.
Nithin, we are talking at a time where the millennials are thinking less of saving at this point in time. We want as an economy to be able to spend, but this entire investment mantra that needs to be infused, how challenging do you think that's going to be?
No, absolutely. I think the country, especially the millennials, is saving lesser than ever before, and I think someone has to, attempt at changing that, right? As in, I mean, so with everyone trying to build products around lending and getting people to spend, I think someone should be building products to help people save as well. So, and I think one of the ways to go about it is by simplifying the product. I mean, the more complex it is, the lesser attention span today's millennial has to learn something complex, right? So, I mean, even saying something like a small cap, large cap, mid cap, is I think complicated for for someone who doesn't understand what it is, right? So I think it's about simplifying the experience and selling it maybe in a different way.
Selling it in a different way, that's something else. You mentioned simplification, and of course, you come from a space which is all about keeping the costs low. Now, within the AMC business, how do you pull off these two?
No, I mean, see, the thing is, if you are a traditional AMC, who has fund managers, who have to stock pick, etc. I mean, the costs are going to be higher. But if you're a tech, if I'm talking about passive products, your passive products essentially has to mirror a certain index, right? As in, so the real skill here is to just create that index, get it approved, and that doesn't really take. The bet here is that won't really take too much cost, and having a business like that, which is leveraging tech to build these indices and then distributing it digitally, So I don't really think costs should be as high to run an AMC in today's world than how it is for the traditional folks who've been running it for the last 10-15 years.
As far as managing of risk is concerned, because that's another aspect of that simplification that you're talking about, because it always, whenever mutual funds are sold, it will come with that disclaimer that you need to read the fine print very minutely before you make the investments. And specifically on risk, when you're about to create these products, how effectively would these products that you have in mind be in managing risk for your investors who could be millennials who don't understand management of risk per se?
No, I mean, I think, see, the easiest product to sell would probably be a retirement fund, like a target date fund. And how target date fund works, right? As in, the equity to debt allocation keeps changing as you grow older, right? So automatically you're more conservative than a fund which has complete exposure to equities, right? So because you're always having some debt exposure with a fund like that, right? So that would, like, for example, would be a great way to introduce someone who doesn't understand risk even to the capital markets, because you're not giving him 100% exposure. You're kind of starting him off, at lesser exposure to equities, and then keep changing it as you grow older. which people today on their own don't do it. I mean, if you were to ask most people around you, so they're not really looking at equity and debt allocation as they grow older, which I think everyone should do. So.
And I keep going back to the low-cost stockbroking business that you started at Zerodha, where you handle 4 million trades a day on the exchanges, but you also have this coin platform, which is, of course, your distribution arm to sell existing mutual fund schemes, something that you're already doing. So will your own schemes run on the same coin platform and compete with the rest? How exactly do you plan to do this?
No, I mean, see, the thing is, if you look at the ecosystem today, the largest banks are also the largest AMCs. They're also the largest distributors. They're also the largest, advisors and etc. Right? So, I mean, everything is done at arm's length. So, of course, so we, this business would be set as a standalone entity at arm's length, and yes, and these funds will have to compete with the rest of the funds. So, absolutely, so.
Fair enough. Nithin, I also wanted to ask you because, like you said, you're going to leverage technology, but you've had situations in the past where technology failing you during market hours. This happened twice last year. In February, it happened again in August. So I'm just wondering how you've gone about managing to fix those problems so that there is no recurrence, and what kind of investments have you made in developing your tech further?
Yeah, I mean, see, the thing is, these are apples and oranges, right? As in, powering, trading platform where there are millions of trades happening is a different kind of skill set. I mean, and then the scalable, I mean, like a business like us, we are essentially a technology business, right? And every tech firm, be it your Apples or Facebooks or Googles, I mean, everyone has a downtime. So it's how life is, if you're a tech firm, right? So, but what we have done is that every time there has been an issue, we have learned from the mistake and we've made sure those don't repeat again. Like I said, I mean, the last time we had, I think in the last whole year, in the last 14 months, we probably had a downtime, where a portion of our customers have not been able to trade for 35, 40 minutes, right? So is it really bad? I mean, it isn't really, I mean, unfortunately in a business like ours, we can't be down even for a minute. So it is bad in that sense. But if you were to compare us to other brokers, etc., I mean, I don't think we've been down more than some of the other largest brokers in this country. So, but that said, as I said, our core focus at all times is to make sure our platform's up and running and performing it optimal way.
Well, we certainly hope that's the case, and the course that you're charting for the future in the AMC business as well. We'll be monitoring that as soon as the products are out. We hope to understand those a little better and watch your growth story as it develops from here. Good luck on the process, Nithin. Great to have you with us here on Startup Central. And with that, we'll take a very quick breather here on this edition of Startup Central, after which we bring up what Mukesh Ambani has said in that conversation that he had with the Microsoft CEO. He said that gaming is going to be the next big deal in India, and we have a conversation coming up on just that with the people behind Nazara. They are heavily into games. That's coming up here on Startup Central. Keep it with us.